Hello and welcome. You're watching Business Plus. Once the poster boy of startups in India, Byjus is finding itself in the hot water. The Enforcement Directorate on Saturday searched 3 premises in Bengaluru linked to the company over allegations of foreign exchange law violations. Searches were conducted at Think and Learn Private Limited, the company that owns Byjus. Now, ED says that the search yielded various incriminating documents that incriminate Byjus, and also some digital data was seized. Now, Byjus has received foreign direct investment of nearly 28,000 crore between 2011, the ED says, adding that the firm remitted 9,754 crores to various foreign jurisdictions during the same period in the name of overseas direct investment. Now, Byju has denied any wrongdoing. Remember, India's most valuable startup, Byju, a year ago celebrated $48 billion valuation and expected equity raising through a SPAC listing. But as per the latest report, it only managed to raise $700 million at $22 billion valuation. Now, the EdTech major has posted losses of over 4,564 crore for the financial year ending March of 2021. The revenue from operating mainly came from selling EdTech products, which fell 9.5% in financial year 21. The company delayed the filing of its earnings in financial year 21 and also in 2022, which was delayed and was subsequently supposed to be disclosed earlier this year. Hasn't happened so far. It's not looking very good for Byjus at this point in time. We are going to be discussing the Byju story, the story of startup ecosystem in India, and how and what is affecting the overall startup economy. With me at this point in time, my colleague Rakesh Khar joining us here in the studio. Rakesh, coming to you first, what exactly happened at Byjus?
Hi, thank you, Shweta. I think there seems to be no end to the winter of discontent at Byjus. But let's remember that, it's not only Byjus, it's just the face of the discontent and the problems in the Indian startup system. Well, as it's a phenomenal story when it comes to the promise that the startup ecosystem holds in India, and the world is talking about it, but there are some systemic problems, if one can use that phrase. So, time for introspection, deep introspection at Byjus and across the, startup ecosystem, especially in the edutech space. So, the latest instance adds to the litany of woes that Byjus has gone through, from human resource element to lack of funding to lack of clarity on its filing, papers with the regulatory authorities, and now the ED charges against them, which they have denied. But truth be told, that there are challenges, and if we just say it's a problem between Byjus and the regulatory authorities, that's just the tip of the iceberg. To my mind, the entire ecosystem in India needs a re-examination from all relevant stakeholders. Let me just put it in context. We had a brilliant year in 2021, and 2022 again the story got slightly, disconcerted. We had maximum number of unicorns in 2021, and it was the toast of the world. Second best number of unicorns to US, and 2022 the funding started coming down. In one sentence, I'll give you more details about what the problem to my mind is. And I've been speaking to a whole sort of experts in this space who were actual original founders of the startup thought process in India way back in 90s, and who've been watching this now. The problem is that there's an idea, good, bad, ugly. There's an investor. Then there is a valuation and the growth push. Finally, there's P&L.
Right.
Who is the final custodian of this entire value system? We have no clarity on that. So what we have gone for essentially is growth and valuations. What we call price economics, price unit economics, or positive unit economics. That means, are you making money for the acquisition that you're doing? That has gone for a toss.
Okay.
Now, the guy who's got a brilliant idea has got an investor. The investor is making money by valuating and showing growth as a parameter. What is growth? Essentially, it's volumes. So when volumes don't translate into positive price economics, that's where the challenge is.
Okay.
And further, to compound the entire ecosystem is the push for unicorns. It's a number ultimately, Shweta. We are happy saying that we have X number of unicorns next to US. We are giving China sleepless nights. But if those unicorns are not profitable, so the key question, the sum total of this entire challenge today is who is going to guarantee profitability? Who is responsible for P&L? I mean, the investor comes in, invests money into an idea, and then ejects at a level where he's making some money. But finally, who's holding the can?
Okay.
So coming back to Byju specifically, you know, I think it's still one of the most valuable companies we have. And but did it take the right route in terms of basic management, you know, in running a successful company? So that again is a key challenge. And there have been a whole lot of allegations being made against startups in this country. All of them are not right. Like, you know, them siphoning off money, stripping off assets, and spending money on themselves, building large houses, buying, you know, mini aircrafts and stuff like that. So there is need for all these four people I mentioned: the idea, the investor, a clutch of them in case of you know, the Byjus. Some of the best known marquee names are there in you know, Byjus. So are they looking at it? I would like to know how they're looking at it.
Absolutely.
And what is the redressal they're so to say prescribing.
Because they continue to fund Byjus.
Absolutely, as I said, you know, in terms of the value proposition, it's a very good idea. But overall, positive price economics is something that is the key takeaway. And just to tell you, there is course correction already happening. I had met Amitabh Kant. He is now with G20 Sherpa, but before that he was, you know, at Niti Aayog and, so to say, mentoring startups. He also did admit that this undue push for unicorns is leading us probably not the right way. But I would be happy to hear out our experts probably who would have joined now.
Okay. Joining us at this point in time, Sreedhar Prasad, who's a strategic advisor, also with us, Srinath Sridharan, independent markets commentator. Gentlemen, appreciate you taking time out. I want to come to you first, Sreedhar. Do you agree with the analogy that startups, and in this case particularly Byjus, and startup ecosystem overall is pushing for growth and valuation over bottom line and profit?
So the statement is fair. I think that's how it has been built, right? And I would still believe that we are a young startup country. We are just 15 years old or 10 years old. So most of the businesses we know, where we are also consumers, were built on a scale model, right? And that's how usually it's built. And then you refine and reach a profitable steady state. However, just like a colleague mentioned, from the idea to the investor to X and Y, possibly what is missing with the refinement is the business model. You need to have clarity on the business model, whether you're able to achieve it today, achieve it tomorrow, achieve it the day after X amount of scale, that's still fair. But what is the business model which is being backed has to have conviction and the kind of clarity. But unfortunately, many of the time what is being backed is the human being and the idea, right? And then you try to figure out the business model after Series B, Series C in some scenarios. That could lead to this negative publicity, negative acceptance of the Indian startup ecosystem as a whole. On you guys have grown, crazy amount of customers, crazy amount of transactions, but what's the business model, right? So I think that is where today possibly people are focusing on. Though media is calling it focus on profitability, I would presume that it is actually focused on what is the fundamental business model, right? Does it generate money, or you're giving money to buy service? So I think that is where we are from a perspective of many of the instances which has come up, unfortunately, in the past 12 months, where there is far more scrutiny, far more visibility, far more reporting issues coming up from the country. And I think it's a good time to recalibrate this even for the unicorns, the Soonicorns and the young startup founders who are setting up businesses to have a very clear conviction on the business model. And then obviously the economic model and the unit economics, which eventually follows that.
Okay. Srinath, one of the questions that comes to my mind is that you have big investors backing, you know, many of these companies, including Byjus. So if there was no business model or a not so sustainable business model, they would see through it.
See, I mean, one of the fundamental challenges in a VUCA world that we live in is India has one of the highest volumes of consumers or potential consumption possible. I think to me, it's a myth that we are always chasing that elusive middle class. I mean, middle class is so scattered as a range from all the way from lower middle class to upper middle class. If you look at it, there are only 10 crore Indians who are actually consuming most of the products that each of these unicorns are chasing. And when we say startups, let's be very mindful that we're talking about digitally led startups, not necessarily entrepreneurship as a startup. And we have always been celebrating unicorns. We have kind of pushed out what we should be celebrating, early failures to learn from, what are the business models that kind of didn't work. And we have not done that. So it is, to me, when it's a musical chair, the investors, let's not beat ourselves. The investors also, the private investors, including the large investors, have to take some flack for this. They have exacerbated this entire behavior of sometimes even the founders behaving crazily, or their companies. They have pushed them for higher valuations and not bothered about actual business model that they want to pivot to. What is, where are the large monies globally? If you look at the last 30 years, one of the large ones which stands out is Amazon, including in India, Amazon India. What have they chased? They have put in large sums of equity capital to change consumer behavior and consumer habits. Over a point in time, as consumers get comfortable with technology and how they adapt and how they use those ideas into execution. So it is fair to say that they would lose money in the first couple of years. But how many of them actually showcase a model where they say, I'm going to lose money for 4 to 5 years? Everybody would say, I'm going to make some money, I'm going to use. We keep on changing the metrics. First, we say consumer engagement, then we say consumer frequency of visit to our website, number of transactions that happen, the average ticket size. So somewhere there has to be a goalpost, and which is why I think the private investors who are ready to take, it's a risk-based capital. If they are ready to take this risk, saying India is a long-term market, I don't mind losing a couple of $1 billion in India in the initial years to learn it. I mean, it's a price that they're willing to pay, and we should not be complaining. But let's face it, all of us have to take flag saying we still keep on putting pressure on unicorn valuations. Media celebrates it, every investor celebrates it, every B school celebrates unicorns. But hey, what about those other 8,000 companies who are doing fairly well in terms of the entrepreneurial journey? And we never seem to celebrate that. And that's, I think, it's a whole ecosystem that where we all have to take a flag. And somewhere, I think we must also speak about governance of startups, the conflict of interest, how do the private investors, as much as scrutiny that typically the public listed entities go through, can we actually get some of those scrutiny for even startups or unicorns, because large sums of monies are involved, and I think that's worth the conversation as well.
Okay. Do you agree with Srinath there that partly investors are also to be blamed for the fact that they want higher valuation, that they are the ones inflating and making big, huge promises, pumping in money, but not really, holding on to their stake in a company?
Shweta, absolutely. I think, to my mind, everybody is to be blamed. But I want to ask our esteemed panelists one fundamental question, first of all. Ultimately, whose responsibility is P&L? I think that's where we have some confusion. If it's a listed company in India, you know the management or the board is responsible. In case of these, so-called celebrated, startups, some of them have great ideas. Some of them have possibly great business models. We have a Zerodha and a Zoho also as great classic case studies, which are success stories. But for many of them, for most of them, I think this question needs to be asked. Who would you put the final, whose neck is on the chopper if it doesn't work? Because that should bring in about a lot of clarity to my mind.
Okay. Sridhar?
So I think there's no change in that. Every company is a company in India or abroad. Who's in the neck is the board and the founder or CEO. There's no change to that at all, right? I mean, I don't think we should even give a separate definition by virtue of it being a digital startup. The ethos of the company.
The question here is that most of these startups have founders and investors as the board. There's no independent director. So that's why I'm asking, where do you draw the line between the idea guy, the investor, and the board, and the accountability finally? Where does it rest?
So what you're saying is right. The importance of independent directors in startups is a concern which is coming up. And then the board and the founder should have the neck on the line, right? And the conflict of interest of the board being majority financial investors, yes, need to be balanced with just like any other listed company in the country, where you need to have people who can ask questions openly and can add value beyond just the digital economy. So your point bang on, there should not be any difference. But to be ready for it, yes, startups starting with unicorns and unicorns need to have that kind of a board where there is constant value add and not just pressure on growth and valuation.
Srinath, I agree with you. I mean, media has also to play a role. I think we've been too much, so to say, in a celebratory mode, bringing in these numbers of unicorns and unicorns, and probably getting a little bit of sweat off the ground. But that apart, my fundamental question is, who is ultimately responsible? Because if we don't find that complete accountability, otherwise, to my mind, the investor makes his money exiting, and he's happy with it. The ideas guy gets a new life, he's happy with it. The customer gets good, bad, ugly service, he's happy, unhappy with it. What happens to the P&L? What about positive price economics, which I keep referring to? Who is responsible for that?
See, very simple. The moment we treat every unicorn or every startup beyond a certain threshold of investments like a listed entity, there are two aspects to governance, right? One is the board of directors is ultimately accountable for all governance, but every single executive decision or accountability to business plans and promises is that of the CEO. The larger challenge is the founders, CEOs become the key man risk themselves. Will the private investor who has invested 1,000 crores or betting on that founder actually have the gumption to sack that founder if he is not delivering value? I doubt it. You might think it is possible in a listed entity, which does happen, but in the startup ecosystem, there is an inherent conflict of interest. And if you look at most of these large boards of some of these unicorns, a huge conflict of interest because those directors, independent directors, are actually advisors to some of those PE or family offices themselves, while by law or by regulation, they might tick all the box about independence, that more than certain amount of their financial earnings per year doesn't come from these boards, all that. But there are lots of layers of what I would think the spirit of governance gets disturbed because somebody gets paid not directly in a different route, somebody gets equity through a fund and not directly through the company, which is not allowed by the law. So I think there's much more to be seen in the unicorns and much more to be seen in the listed space. And I think sooner we do that and sooner we segregate governance and management. In this case, very simple. If you're supposed to deliver profits and growth, it's that of the CEO. But then the catch is, will you fire the CEO? What next?
I mean, a bit of a, so to say, drastic idea, but do you see government intervening? So the Corporate Affairs Ministry's mandate is to bring about a very empowered board. So do you see that happening? Should it happen sooner, or it's something that interferes with the overall functionality and the independence of a company and the management to run it?
See, I think here, more from the SEBI route, I think if they bring in, let's say, some form of an advisory or a suggestive one, saying that if these companies are going towards an IPO, the previous year, 3 or 2 years, they should have demonstrated such behavior would be a far more, I think, appealing one for the startups because they want an exit route. So they would improve on their corporate behavior through those routes rather than a diktat from an MCA.
And what happens in case of an unlisted company, because it's just very opaque there. You know, taking one example of Byjus, where the problem is there's been no audit, or at least on paper, there's no track of an audit since financial year 21.
As I said, it's a love affair that the government of India, the regulators, and the startup ecosystem has. So in that sense, what we're finding out today about many of these startups is a little startling. But what happened in between? We had COVID, so there was a bit of a, so to say, retreat. But was that strategic, or was that because of COVID? How can you have a company with that kind of valuation not presenting its papers? I'm not just saying for Byjus, I'm saying most of the unlisted companies have this charge against them, and this is very serious, that there is a lack of transparency. There's lack of transparency on the board, there's lack of transparency on how the founders as CEOs operate, what are the matrices in terms of their own take away from the company. So that's why I keep repeatedly, and I think all our panelists are agreeing that there is time for complete recalibration of the ecosystem. And the first and the foremost thing is that let's not get too excited about the valuation business. And I would call for certain, amount of rethinking on behalf of the investors, because these investors are global investors. They are expected to do their homework pretty well. But whether they pin the founder on that, on those deliverables, or it's a shifting goal, as Srinath mentioned, what happens is that they keep shifting the goal. Either they link it to, say, volumes, then there are targets, they bring in a great brand ambassador, spend crores on that, and then try and get more, so to say, acquisitions. But cost per acquisition versus return per acquisition, that's where the challenge is.
And that's interesting, cost per acquisition, return per acquisition, and this is not just in case of Byjus. You have a lot of small, relatively smaller startups as compared to Byjus, getting in large, big celebrities, hoping to make them brand ambassadors, not getting the value back as they expected.
Quite right. See, in fact, there is a parallel thought process. Some of my own colleagues, senior editors, believe that P&L is fine, profitability is fine, but how do you build profitability if you don't have scale? Okay. Scale means volumes. You acquire a customer over a period of time, probably. I'm playing the devil's advocate myself. So we really don't have a perfect solution as of now. But there is some amount of, movement back from this celebration. And in terms of the ideas and the investors, that's where it begins, Shweta. If it doesn't work, and pick up all the inputs that are available today, And we don't have all the inputs available yet.
Absolutely.
So if there is no re-examination at that level, and I do forcefully say that, you know, there is need for accountability. All these big ticket investors in these companies must, you know, not just look at exiting. They have a time frame. There has to be a time frame for profitability equally. You build scale, you build growth, but don't confuse growth with profitability.
Profit, absolutely. Sreedhar, I would like you to come in at this point in time. I think interesting point there. You build scale, and there is a need to build scale. Obviously, there is a need to build a top line, but don't forget the bottom line in the long run and in the short run as well. Have a sense of proposition on when would you want to turn around the company, make it profitable.
So I'll make a sensitive comment here, and this I've been reserving for a while. I personally believe an edtech company or a health tech company in India cannot be not profitable. Okay, these are two fundamental needs where Indians spend money. We don't ask for discounts. When I go for my son's school, I don't ask for a discount. I'll pay what they ask me to pay. When I go to hospital, I'll pay whatever they ask me to pay for a surgery or an admission. These are two industries which has been built on profitability historically. Now, just with the digital layer, if you are a true value proposition provider, these two industries cannot have the fundamental business model being non-profitable. You may take a little while for the idea to germinate or idea to get visibility, I understand. But the fundamental model eventually can't be that I'll give you money to buy my service so that I'll always be having a bleed. Now, then the question will come up, are you actually an edtech company or are you a content company or are you an engagement company? Right? There are many engagement-oriented companies which are bleeding, but they show their engagement matrices. X number of visitors, Y number of minutes. That should not be the metric for an edtech company because you're providing education directly, indirectly, right? Whether it is K-12 or certifications or post-graduation or graduation, you're providing a fundamental need for the country. Whether it is, like Srinath mentioned, the huge belly of India, the middle class, they don't ask for a discount for education, right? So when you're wiring that business model, say 3 years hence, I'm touching a sector which is very core to the fabric of the nation. I cannot be not profitable. I can use the best of the celebrities to communicate, but it can't be a discounting-led model for these two sectors.
Absolutely. You have a fair point. I mean, given the penetration in these two sectors, we need to really, you know, the virtue of digital is that it will fast-track growth both in literacy as also in, you know, preventive health, and then finally India being healthy. Fair point. But so, you know, fundamentally, let's take the edutech sector. One charge is, I'm not buying it, but I'm just putting it up for discussion, is that there's a lot of Me Too ideas. You know, their ideas are not original. We have Byjus, and there's a series of, you know, edutech companies coming on the table. And the other thing is changing business landscape. In COVID, there was a certain fillip to this particular business model. Post-COVID, when people have gone back to the classrooms, that fillip probably, I don't know what percentage one puts to that fillip, but that has, so to say, retreated. In that sense, you know, going forward, what do you see is the reasonable, you know, way out in terms of both building growth and volumes for them? We'll park profitability for a while.
Sure. So in our country, education cannot, I would say, be only digital, or reinforcing education solutions by startups cannot be only digital anymore. We need to really think about how do I become a multi-channel approach to the students, because people don't want to have the children sit in front of the computer anymore, right? They would rather want to have them educated live as well. So a multi-channel approach to whatever your product be, whether you're a technology company supporting a school, or you're a content company, or you're a alternative support company like Byjus, to really rethink post-COVID the way the world is moving for students. Can I rehash my operating model where I grab the customer's presence and intent for education, not just on the digital platform, but wherever required on other omni-channel ways, whether it is physical, whether it is digital model, and then create an ecosystem. You can't just be a product company anymore in EdTech is what I would say. You have to create an ecosystem where the customer is loyal and trusts you and is paying for the service. There are companies, I mean, just like I think Srinath mentioned, I've heard of a company called SchoolNet. They're a profitable company. They're doing very similar stuff for the government schools. They teach at the school, and when you go back home, the digital support after you reach home, the tuition, it's a profitable business. Small, maybe, I don't know what's the top line, but maybe in a couple of crores. So it's not difficult or impossible. It is where, like as you earlier said, do I focus to fine-tune my business model to my 0 to 1,000 crores and then approach scale? Or if I want real scale, then I pay for my service. I pay them for adopting my own service. So I would say, to answer your question bang on, omni-channel, and then look at what is the real value I'm adding. Am I adding more content? And in which channel am I actually adding the real value, right? Because there are many, many Me-Too apps available in India and globally. You can study whatever you want free of cost. So what is the real value I'm adding? And I can, and the last, I think you mentioned this, but we digressed away. The price discovery for EdTech is very critical, right? The companies which we know, maybe they're not the benchmark. We have to revisit what is the right price for this service digitally for the Indian consumer. People are willing to pay. That we need to understand that. We can't compare ourselves with an e-commerce company or a fintech company. These are different sectors. So in this sector, what is it that an Indian mass middle class who's earning, say, 5 lakh rupees per annum as salary, who's willing to pay for his son's education as an addition and price that accordingly, rather than going with the fundamental digital e-commerce approach that I need to offer discounts and I need to lure the customer with discounts and coupons in this sector, which I don't think is a requirement.
Srinath, what's your view on this idea that, the criticism of the startup system is also that there are not too many original ideas coming in. There is a certain valuation trajectory, say in edutech, in health tech, and there's a horde of ideas which essentially are copied from the first one or the second one, and that's also the reason that the entire sector is not looking all that great. You buy that charge, or you think that there is room for far many players even now in these two sectors?
No, I agree there. I mean, the EdTech and the health tech space, the only thing I don't agree with the previous comments on the profitability of the health sector is very, very simple. If you look at the listed entities, the health sector listed entities, they really have not churned the gravy train for their investors so far in the last 10 years, the listed hospitals and others. We all think that when you walk into a hospital, it's always packed, they charge a lot, they make tons of money. And why is it that they are not profitable? That's a question that I think the listed entities should be asked. Health and education, one point is very simple. The parents or the stakeholders always pay. One segment, which is the lower middle class, might bargain or seek some discounts, which is fine. But there are no original ideas. And unfortunately, what most of the founders forget, or even the investors forget, is getting to a unicorn or any level, let's say being half a unicorn, is like climbing a mountain. You don't get up one day and say, I'm going to climb Mount Everest tomorrow. You're going to acclimatize. There are issues that will happen when you start climbing. Sometimes you'll slip. Sometimes you'll have to stay at the base camp for 3 days to get used to it. And then you climb. And I think I think we're looking at the entire Indian scenario, unfortunately, with the same lens, saying that if this guy could climb Mount Everest, why can't everybody climb? And the other one is size and scale. I don't think it can come overnight. The India consumption story or large India volume story has been, I think, missold. We have to be very practical. Otherwise, why do you think a Unilever or a P&G or a Marico have taken so many decades to establish a profitable but consistently profitable business? They did not go out and say, I'm now serving 200 million Indians overnight. It takes time. And I think that's where pragmatism of, I think we'll have to balance the youth and the vibrancy with some wisdom coming into through the boards and the investors. But I don't see that much of it happening, because almost everybody is carried off over by this unicorn valuation story. Nobody's saying, am I actually solving for customer? The other one I think we may have to discuss that, which is very critical in this entire EdTech story, is there have been complaints, tons of complaints over the last 2 years that we have seen parents on social media complaining, saying we have been forcefully sold a plan, a 2 lakh rupee plan or a 3 lakh rupee plan for EdTech while it was financed at the back end, but they're not seeing value in it. And I think that goes to Sridhar's point of what is the actual price discovery that we do and how do we solve for some of these consumer protection. If the same thing had happened in a fintech company, I think there have been enough flags raised by RBI and fintechs would have seen the flag. And we have seen how RBI had stepped in for digital lending and said, clean up the mess and let's get into consumer protection. What do we do to EdTech? What do we do to EdTech? Is there a standard of quality or framework where we can bring in and say, these are the minimum standards they need to meet? And I think that's a question mark as well so far.
Brilliant. I think, Shweta, the key takeaway is that one, that, there is a time frame to a business to build up. So that's the good news. And it's also evident in Byjus that the big ticket investors have not exited. So they have faith in the ecosystem. They have faith in companies which have original ideas. To my mind, the last point probably that I would like to add here is that any business idea is worth its while, whether in the digital space or in the linear space, does it solve a problem? So India has so many vexed problems. We mentioned health and education. I think agriculture has been a laggard, unfortunately, and so much dependence. That's our other area of discussion as well. But that is one area where I see room for a lot of new original ideas. And if they really shape up and they solve a problem on the ground, profitability should not be far away. That's what I would say.
Absolutely. So I think all in all, the big takeaway for me personally is that if there is a problem, your startup should be a solution to it.
As opposed that's the fundamental of a business. Absolutely. It fills a gap.
Fill the gap. That's the message coming in there for the startup community at large. But we're going to move on now to our next story. India's manufacturing industry is on a rapid growth track if the latest PMI numbers are anything to go by. Robust factory orders and production in April have helped the Purchasing Managers Index in April rise to 57.2 from 56.4 in March. Now, both new orders and output grew at their fastest clip since December, thereby resulting in a rapid pace of hiring in April. Now, foreign demand also expanded at its quickest pace in 4 months in April. On the prices front, although manufacturers signaled higher operating cost in April linked to fuel, metal, transportation and some other raw material prices, the overall rate of inflation remained below its long-run average despite quickening since March. Shifting focus, and maybe not so much shifting focus because this is directly related to how inflation will pan out, food inflation will pan out at large. In an unusual weather for this time of the year, rain pounded city of Delhi, parts of UP, north and even west of India over the last couple of days. On Sunday, several parts of Madhya Pradesh, including Bhopal, Indore, witnessed unseasonal rainfall along with hailstorms. While it's a respite for residents, as India's meteorological department forecasts the temperature to plummet by 9 to 10 degrees below normal, it spells doom for the agri sector. There could be, and there are reports of course, that there could be more damage to the crops if the rainfall continues. With me at this point in time, Rakesh continues to be here in the studio. Rakesh, it is going to be a big bummer for the agri economy at large if the unseasonal rainfall continues.
Absolutely. I mean, for people living in Delhi, I know it's been a bit of a relief, but for the farmers, obviously it's an obvious challenge. To put it in context, Shweta, I just was reading the RBI latest monthly data, which came out 23rd of April, which is just last 1 week ago. They seem to be, cognizant of this, the unseasonal rains and the potential damage it has caused. I'm just reading this one line so that we are able to, we don't need to agree with RBI in whatever it says, but there is a studied perspective versus, random thought that I'm sharing with you. Even if I'll impacts value added in agriculture, real GDP growth in India would be well above 5.9% projected in the IMF's World Economic Outlook report. Okay. So they have, so to say, and they have identified it as a downside, but downside risk, but not something that's going to totally, take away the, the track that we are looking at. Last year also, if you have noticed that, there were concerns about unseasonal rains in some parts of the country. Unseasonal rains is not a countrywide phenomenon, Shweta. This happens in pockets. In fact, you would have probably encountered, you're in Ghaziabad, that it's raining there, it's not raining in Delhi. So that's happening in UP, Bihar, in the Hindi heartland where the crop is right now ready for harvest. So it is disconcerting, but is it a challenge which cannot be surmounted? So what we call containment in terms of the overall, overall capability to stick to the numbers that we have projected. Last year we had a 6% surplus finally on the monsoon. But yes, Shweta, it's a very, very interesting thing to see because we might have moved very heavily in the services economy. Dependence of agriculture on 60% of population still is there. So it only contributes about 16 to 18% of the GDP.
That is
so
correct.
If we delink the contribution to GDP vis-a-vis the dependence of agriculture on a large section of this country's population, especially in the rural India, then we have a challenge if it continues to play truant.
Okay, it's a challenge not unsurmountable. It's a challenge we can contain. We have at this point in time Sreedhar Prasad, Srinath Sridharan, I beg your pardon, continues to be with us. Also with me, Karan Mehrishi. Gentlemen, appreciate you joining us. First to you, Srinath. Rain is lushing parts of north, west. There are reports of unseasonal rainfall. possible damage to Rabi crop. What sort of impact are you assessing?
See, I think one inflationary challenge, what is it going to happen in case of food damage and crop damage and we don't get the food on the table? Are we going to see price rise, or are we going to also see government intervening in, let's say, the minimum support price to the farmers? That's a question. Two, political one. I mean, we are in the midst of various states going for election. What happens, and what do the state governments jump in? Do they jump in with, let's say, unduly very luxurious kind of economic activity or subsidies for them? I'm not complaining there, but is it a political messaging, and can they really afford? Can the states really afford? And third, primarily, is very, very simple. In case of any of these going forward, what is going to be the consumer or the consumption sentiment? I remember we spoke about it a couple of days ago, speaking about Q2 and Q3. What is going to be the consumption sentiment? There is a sentiment cascading effect we will have. FMCG companies, people not buying in, and so on and so forth. So I see it as more issue on two types of climate change. Can we become more cognizant and, let's say, at the ground level work on this? If you look at climate change as a macro perspective, I think these kind of unseasonal rains or very, very bad droughts are the effect that we have been expecting all these years. And it's here, it's a reality, including in India and parts of India. So how do we mitigate these and how do we do it? And I think that's where I think some consciousness needs to come. But inflationary pressures, I'm worried about.
Okay, we'll talk about political impact at this point in time before we go to the economic impact at large. Joining me also at this point in time, Kartikeya Sharma, Executive Editor, TV9. Kartikeya, appreciate you taking time out. I want to understand from you, rainfall, as we were discussing earlier, an unseasonal rainfall does not really impact economy only, it also impacts politics and policy making. In your assessment, this unseasonal rainfall, what sort of impact are we likely to have given the political scenario and the fact that we're going to elections?
I think there are a couple of things. The first thing is that the Prime Minister has taken a global initiative on climate warming, the sort of change in climate, and the effect it has on local weather patterns, and he has spoken about it publicly. So if you look at all the international forums in which the Prime Minister has been speaking, he is primarily speaking about how it affects different economies if the climate changes globally. So first of all, he has spoken about that. But the larger issue is that what is now starting to happen, it's like the 1st of May and we have this heavy rainfall. I'm a Delhi boy. I haven't seen a rainfall like this in last 40 years of my life in a city like this. But for some it might be a cooling down of the weather, but for many it is about the way our crops are sold in Western UP, Haryana and Punjab, the granaries, or for example the very famous Malihabad mango. So there are a number of crops which get affected. Yes, in terms of economy, we have cold storage, we can import food stuff, we can we can buffer this climate change, or we can buffer this anomaly in the weather. But the larger problem here is that in long term it affects the agrarian sector, one. Secondly, it's an election year. There are a number of elections. It's in Madhya Pradesh, Chhattisgarh, Rajasthan. You have election in Mizoram. You have elections in Karnataka right now. So it's an election year. You have elections in Telangana this year. And then you have Lok Sabha elections. So any political or social unrest in India, if it emanates from the changing weather, so it's not only about the food security, it affects the political climate also. It's because lack of food security can create both political and social unrest. If you read the books about various food programs which were run in third world countries in 50s and 60s, and these are declassified intelligence papers in America, then the necessity did not emanate from the feeling of feeding the poor. The necessity emanated from the fact that if the social unrest continues, then the capitalist order would be threatened and the countries would turn communist. So there is a political aspect to the world food order, and the way Indian agriculture is under stress now in context of water or unseasonal rainfall is tremendous, and it is for this reason you find today that there is great push on part of the central government on millet. Prime Minister leaves no occasion to talk about it. It's not a fad, it's not about losing weight, it's not about gluten-free bread you'll have. It's about that you can do away with these addictive crops which are using 70% of your water. So I mean to say that it's just not about food, it's about political security, it's about social unrest and direct bearing on Indian elections. So I think anyone in the government would be pretty mindful of the fact that as to what is happening in India.
Okay. Rakesh, I saw you nodding at millets.
Yeah, I mean, of course, millets is a positive diversification, but early days, obviously, you know, the scale at which we sow wheat, you know, rice, and millet is an idea in its infancy, but we need many more such ideas. You know, we all keep talking about the VUCA world, and it's become so popular that weather wants to join that club. So in that sense, weather is also playing trot. But I agree with, you know, Kartikeya that this particular government has been extremely lucky, Shweta, with two things. It got a great run of monsoon. Monsoon is an imponderable, and if it's plus for the government of the day, whether it's UPA or it's NDA. In this case, Modi government has gained immensely from a very stable and positive outlook for monsoons. So if that gets disturbed, as of now, it doesn't happen to be disturbed. As I read from the RBI's 1-week-old report, they have accounted for it. They call it a downside risk, but they feel it's within the containment zone. And the other good thing that happened with the Modi government was, again, in a macro economy which impacts the common man, is the fuel prices. So, you know, going forward in the election year, he's absolutely right. You know, they would like an environment where, especially the rural segment, is not put under any undue stress. Now, how do we measure that? One, I said RBI could be wrong in its forecast, which was 1 week old. And this is signed by the Deputy RBI Governor, not the RBI Governor. So it's an approach paper in that sense. It does mention El Nino, but concludes that we will still do 6% growth, which is when the elections are due or the actual voting happens for the general elections. So that's very fairly stable and good news for this particular company if we stay the course. The challenge is that what is the other evidence?
Right.
If the challenge is that this may play trot, the evidence available today from an economic perspective, the corporate results of FMCG companies, which for the last quarter have been looking very good.
Absolutely.
So, and that's one. Both HUL, Nestle, Dabur is awaited. I guess few other companies, I don't have all the details, but they're by and large in the positive zone. Even when market for the last 15-20 days was little, playing range bound, but little below the 61 hit that, we had just before the start of the year. The other indicator is, the one I mentioned, the corporate results. Second is corporate performance on the stock market. On the stock market, ITC, which is said to be what we call the safe and sharif stock, it has done 12.5% growth in the last 3 months. Then, HUL is the only stock which has fallen 3%. But HUL again has a very, very large portfolio, which is not necessarily all agrarian based. So in that sense, this 3% has to be rationalized in the larger bouquet of products that it has. Nestle is 3% up, 2% up. So in that sense, looks like that the corporate India is well prepared to bring in, has so to say what we call factored in the Tront monsoon as of now. But both SkyMet and IMD have raised the red flag, but hoping that it stays the course. If it does not stay the course, I completely agree with Kartikeya. It's bound to become an election issue.
Okay.
But if it stays the course, it will be completely off election because even a positive monsoon is not an election issue.
Okay, let me get in Karan at this point in time. Karan Mehrishi joining us. Karan, expectation is, of course, monsoon will be reined in. There are policy measures in place. FMCG sector has reported good numbers, not just in terms of numbers, but also the stock performance. Essentially, all in all, hinting at a sentiment which is positive. But let me just quickly reverse the situation. What if the rainfall continues? We were fearing an El Nino just about a couple of days ago, but now there is heavy rainfall. What is the impact that you are expecting in terms of revenues on farmers? What is the impact on Indian economy in the long run and food inflation? Do you see that being affected if the monsoon continues? The early monsoon as we're seeing right now?
Hi, Shweta. Thanks for having me. So my sense is, if I talk about the El Nino, my sense is that the overall headline CPI number should come down to around 5.3, 6.4%. But there remains a significant risk from the El Nino effect, as SkyMet has already predicted that LPA would be at 10% efficiency. And now various agencies, both in India and abroad, are predicting a 70% chance of the El Nino effect hitting us this season. Based on my experience, what this generally means is that kharif output will be lower by 9%. Now, it can be lower or higher than this ballpark figure. I mean, that depends on how the situation pans out. But if the irrigation reserves are partially filled due to insufficient rainfall, we may have a bigger problem on our hands. In all likelihood, central and western India may receive less than optimal rainfall, and that will impact Kharif season significantly this year. So it is quite possible that the food inflation may be stoked in FY24. And given the weight of the food inflation, obviously, inflationary pressure is something that we should be very much concerned about. But I also want to touch upon the WPI and the PMI in this context. Statistically speaking, the PMI is lagged by the WPI as wholesale demand influences a manager's raw material purchasing decisions. For FY23, my overall assessment is that WPI will average around 9.2%, with core WPI at around 8.4%. This is actually caused by elevated input prices, and generally it is seen that producers invariably offload this to the end consumer. And this is one of the reasons why core inflation remains sticky at this time. So in FY24, I expect the WPI to fall to around 5.2%, but I'm not too sure whether this will be achieved given the global and domestic uncertainty. And for this very reason, I think that the PMI numbers that have grown very significantly to around 57 may put downward pressure on the overall WPI. Having said so, ignoring a possible base effect, I also think that managers may be hoarding raw materials, especially agro-based raw materials, before fresh produce whose supply is impacted by the El Nino effect hits the market. So it is quite possible that the elevated PMI numbers are telling us a story that it's a one-off event and may not last.
Okay. Okay. Kartikeya, even if, let's say, the rainfall, the unseasonal rainfall pattern continues, and as you rightly mentioned, it's an election year, it's the run-up to the national election year, there is going to be added pressure on the central government, on the state government to make up for compensation losses, help farmers just ahead of the Kharif season, to maybe give them more MSP if push comes to shove, maybe ease FCI laws, take input in terms of low quality grains that will be made available to FCI. There is going to be added pressure all in all on the state government in order to help farmers, because this is going to be an election issue if the unseasonal rainfall continues.
See, the pressure is going to be there because this government has not run on the campaign 2 June ki roti. It has not run a campaign ki har kisan ke ghar pe khana pahunch raha hai. It has created a campaign that this is a government which has empowered the farmers. It has created innovation at grassroots level. It allows them to engage in fields which increases their purchasing power. It's like dignity of life. We are not just giving you lump sum money. You will have a toilet, you'll have an LPG connection, you'll have basic necessities. The survey of Shamika Ravi, which was on electricity, LPG, toilet, bank account and other things. So the government has operated at a different level when it comes to the agricultural sector. So it's not saying that, well, we will give you this much and you can at least feed yourself. So in context of this aspirational politics, when things slightly move here and there, then you have a political problem, because aspirations have no limit. If you recall, when BJP lost the elections in Madhya Pradesh and briefly Kamal Nath was the chief minister, what was the big issue? Bin Mausam ki Ola Vrishti. Now, Bin Mausam ki Ola Vrishti costed Shivraj Singh Chauhan his election. So, or for example, onions. Sushma Swaraj lost her elections because of onions, and Sheila Dikshit ruled for next 15 years. So it's not as if that the agriculture has not made a difference in Indian political life. I'm giving you 2 examples, or for a third example is, which actually changed the course of Indian history is, which very few people understand, that despite detonating a bomb, despite creating Bangladesh, despite nationalizing bank, despite abolishing privy purse, India underwent high range of inflation in early 70s because of the war, and the food prices soared up. And once the food prices soared up, you had a movement in Bihar which turned into a Navnirman movement in Gujarat, and then Jayaprakash Narayan gave a call for total revolution, and Indira Gandhi lost it and declared emergency. I'm just giving you examples to say that it's not as if that agriculture sector is inert.
It doesn't operate in silos.
It doesn't. A couple of things. I think he's raised valid challenges, but the government has already announced this 80 crore free food for 80 crore people.
80 crore people.
It should have ended because COVID has ended, but they'll persist till the results of 2024 elections are out. So in that sense, the basic menu or the basic staple diet is taken care of. And I do foresee, not that I have any independent knowledge as of now, that the farmer income scheme, because this government steered completely clear of any income scheme, but for farmers, that quota, which is a quarterly payment, is going to double, if not more. So in that sense, they'll try and address. Farmer may still be unhappy, as we saw on the roads of the Delhi and 26 January fiasco. So that's again a political constituency, the way the farmer is managed, and that's not one common constituency across India. So there's a northern India farmer, there's a southern India farmer, there's a south maybe between a Karnataka and a Telangana and Andhra farmer. They have different varieties of crops to look after.
And different requirements.
And different requirements. But this uniform income scheme for farmers, which was introduced in 2018 ahead of elections, general elections, will persist, has persisted, will possibly grow, as is the indication. So is this 80 crore scheme. This should possibly mitigate most of the challenges that he mentioned. But who wouldn't love something more?
But I think, on longer run, the IMD had released a report day before yesterday that the rainfall is declining in northeast India. Now, this is something very, very worrisome. And if I look at from the perspective of global economy, this will have linkages issue. For example, from last 10 years, vanilla production is under stress, chocolate production, cocoa production is under stress. Similarly, many things which we take for granted, like a chocolate, becomes very expensive. Places like Madagascar, because of uneven rainfall, they have not been able to do vanilla production properly.
But just to put it in context, I was telling Shweta before you came, Kartikeya, last year also we had unseasonal rains in June and in the second part of May, and there were a lot of fears, but ultimately we had a 6% surplus monsoon. So what happens is that one, there is no uniform rain across even northern India. Forget about across northern India, across UP or even Delhi NCR region. Second, that there is a what we call balancing of the overall rain output. So it catches up, it consolidates, but in the short run there is a damage. I agree with you.
I think from the business perspective, only thing I would say that I think the biggest innovations will need to be done for the agriculture sector in future now.
We said
and
that
incidentally, we just discussed
because
that.
if you look at the rainfall pattern, generally rainfall in India has been form of a drizzle. It drizzles and it continues to drizzle for days in Kerala. Monsoon is about a constant drizzle. But what is happening in India right now is, which we have started to feel and absorb, is either you have a big deficit of rain for an extended point of time, or you have a downpour, which happened in Delhi today.
Yeah.
So now this is disastrous for agriculture. This is disastrous for urban setup. It creates its own problem. So there is a change which is happening, and I think from the business side, we really need to innovate on the agriculture sector in terms of seeds, in terms of storage, in terms of sanitation, in terms of water storage and its use.
So more startup ideas from agriculture sector as a whole. That's the need of the hour. That's where we have a lag per se as far as more ideas is concerned. Remember, 60% of this country is still agrarian. We are still heavily dependent on agriculture. We will keep tracking that story and more. Gentlemen, appreciate you taking time out. We're going to shift focus. Regulators in the US have seized First Republic Bank, sold all of its deposits and most of its assets to JP Morgan Chase Bank in a bid to head off further banking turmoil in the US. Now, San Francisco-based First Republic is the third mid-sized bank to fail in 2 months. It is the second biggest bank failure in the US history, behind only Washington Mutual, which collapsed at the height of the 2008 financial crisis and was also taken over by JP Morgan. Now, First Republic has struggled since March collapses of Silicon Valley Bank and Signature Bank, and investors and depositors had grown increasingly worried it might not survive because of its high amount of uninsured deposits and exposure to low interest rate loans. The Federal Deposit Insurance Corporation, FDIC, has said that depositors will have full access to all of their deposits since the bank reopens as JP Morgan Chase Bank. Now, before Silicon Valley Bank failed, First Republic had a banking franchise that was the envy of most of the industry. Its clients, mostly rich and powerful, rarely defaulted on their loans. The bank has made much of its money making low-cost loans to wealthy, which reportedly also included Meta platform CEO Mark Zuckerberg. First Republic was able to stay afloat in March and April as large banks stepped in to save it with $30 billion in uninsured deposits. Last week, the bank reported withdrawals of approximately $100 billion, sending market in a downward spiral spin, and the rumors of bank collapsing resurfaced It has now been purchased by JP Morgan. And with that, it's a wrap on this edition of Business Plus. Keep watching News9.